DekelOil has a large-scale palm oil production operation located in the Ivory Coast. 2016 was a year of consolidation when it implemented several significant changes, which the company says sets it up nicely for 2017. Executive Director is Lincoln Moore. He joins us now. Lincoln, welcome. What happened in 2016 which gives you this platform to launch into 2017 with confidence?
Yes, I guess talking about the two sides of the business, operationally and then the corporate side as well. It was our third year of operations. We again had production growth. We had CPO production growth for the year and led us to 39,000 tonnes of CPO, which is up on the previous year and up on the year before that. So a terrific year in terms of production growth, and our revenue growth was over 10%, and we'll soon be releasing our full year results and expect that the profitability of the company has improved as well. So in terms of operations, it was a year of consolidation. I think we thought perhaps we could have gone a little bit further with production. There was a couple of external factors which impacted the business during 2016. There was a Nigeria currency crisis, which was an issue which stopped the flow of production through our high season. It had an impact on pricing. So I think we're in a much better place in terms of pricing for 2017. In terms of the corporate side, it was really busy. We had the buyout of our partner. So I think last time we spoke, we had 51% of the project. We've now bought out the partner and brought in some interesting London institutions in their place, and now have 100% ownership of the project. And we've also refinanced all of our senior debts on much better terms than we had previously on the back of the improved profitability of the business. So we start 2017 with a much better balance sheet position and working into an excellent palm oil price environment.
Let's take a look at the debt, the refinancing. I think it was 7.6 million euros, wasn't it? It's now gone out to 8.4 million, but the interest rate payments have come down significantly, haven't they?
Yes, that was part of two debt restructures. So we did one debt restructure, which was just purely one Ivory Coast-based bank, and we did a second with a syndicated loan structure, which had involved a number of banks led by Ecobank and Societe Generale, and the interest rate on both of those two facilities has come down from 10.5% to 7%, and the 10-year out to 7 years. So the interest expense for 2017 will reduce dramatically.
And you've beefed up your palm oil facilities, I think, as well over the year, haven't you? Spent €1 million on that?
Yes, the mill itself can produce up to 70,000 tonnes of crude palm oil per annum, and we were just under 40,000 this year. So we have plenty of organic growth in terms of production. We've improved some aspects on the basis of things that we thought would increase the efficiencies of the mill. The two major ones was increasing our storage. So if a situation does arise where there is any impact on the flow of our product to the refineries and of course to export markets, we have extra storage facility to better enable us to maximise pricing. And we've also put in an empty fruit bunch press, which what that does is allow us to press the empty fruit bunches one more time and increase our extraction rate. So that should increase the profitability of the project as well.
And of course the increased profitability has also brought your first dividend, which was I think a surprise to some shareholders. Explain what went on there, and is this a long-term dividend strategy, or was that just a one-off that you can't see being repeated?
Yeah, just first and foremost, so our strategy has always been to refinance and repay down our debts sensibly, to have funds available to expand the company's operations, and of course to implement a dividend policy. That's what we said we would do at the start of 2016, so it's pleasing to come true with that promise. We've announced that the dividend policy will be progressive. It'll be over 3 years. We expect it to grow, and we've also added that we can add a special dividend if we feel the operations do better even than we expect.
But of course, fuel to that part of the business potentially is the higher price of palm oil, which you're selling into a far more healthy market now than you were even just a year ago.
Very, very pleasing for us. It's our third year of full operations, and we have proven that we can operate in really difficult palm oil price environments. And as we start 2017, we're for the first time in a reasonably good palm oil price environment. So the average price at the moment is over €750 a tonne. Just to give some comparison, H1 last year we sold on average at €540 a tonne. So we think this is going to be very helpful in terms of both our revenue and profitability in 2017.
Yeah. when talking about the share price, I think we're about 36 million, I think market cap at the moment. You're listed on AIM, share price of 12.8 pence. What are you telling investors about the next year or so? There's a bit of M&A in the sector at the moment, so there's a little bit of interest getting going in this sector.
Yes, I mean our strategy remains the core focus is obviously increasing production. That's the main goal in terms of the organic growth that our first mill can achieve. But it is tweaking a little bit. We're focusing as we refine our operations in year 3, year 4 to increase the profitability of the mill. And as I said, the extraction rate should improve from the empty fruit bunch press. We're trying to maximise our sales prices through the extra storage and a better pricing environment. But critically, the refinances that we did last year have left our balance sheet in a very stable position, so we can look at expansion opportunities, and that I think will be something for 2017. We would like to look at opportunities to grow the business into other jurisdictions and other areas of Côte d'Ivoire.
And that would be the Côte d'Ivoire. Would that be just organic expansion, or were you looking at purchasing companies within the Ivory Coast, or is there going to be opportunities outside?
There could be a bit of both. We do have 24,000 hectares of our own land in a separate region, Guthrie, which we would like to start developing that project. So I suspect that we're in a very good position now to confidently start spending money and developing that the starts of that project, which would obviously be the nursery, would be the first stage of development there. But smaller acquisitions, either in Côte d'Ivoire or Ghana, we'll of course look at opportunities where we think there's a business that is priced well, and we think we can add our stamp to it and improve the profitability. It would be interesting to us. But we're in a really good position where, in terms of the cash available to the company, we don't need to go back to capital markets, and any transactions that we would do, we're pretty confident we can fund internally. Of course, I mentioned before, with the syndicate of banks behind us now, that we're pretty confident we've got the funding support to do our expansion plans.
Do you see yourselves as a potential acquisition target for some of the Asian players that want to get out of that particular region? I mean, Africa is an interesting play at the moment.
It's certainly, 2014 was a year of huge M&A activity, and I think there was some digestion of a number of transactions through 15 and 16, but as we see the palm oil price increase and those transactions, complete, we think there will be more groups in Southeast Asia inevitably looking to either West Africa or Central America to expand. On AIM, we saw MP Evans, one of the other 2 or 3 AIM players in the palm oil space come under a hostile bid from KLK, and that was obviously, in the end, they actually fought that off, which was interesting to watch. But we get on with our business, but we do know that what we have is of significant strategic value in terms of a Southeast Asian player looking to expand.
Headlines for 2017 then? Let's wrap it up and take a broad look at what investors should expect for this year.
I think we're looking at the palm oil price now as very, very supportive, and I think that's going to drive some significant revenue growth for us this year. We think that also we can add to our production. I think last year, if you looked at Q1, we perhaps were trending towards 45 to 46,000 tonnes of CPO, and we ended up with 39. But I think we can confidently say that we aim to increase production. But the revenue line in terms of the overall world CPO price will be very supportive. And the little capex projects we put in to increase our extraction rate should mean our profit margins should also improve. So I believe we've had production growth and revenue growth and profit growth for 3 years in a row, and I don't see any reason why that won't continue into 2017.
Barring any headwinds. Okay, Lincoln, it's a pleasure. Thanks indeed for joining us with an update there on the performance at DekelOil. That's Executive Director Lincoln Moore.